Well, what is going on, guys? Luke here today, and the new inflation readings are out, and it's a huge jump once again to 8.5%, and the data just seems to be getting worse each month. People starting to file into the panic room in the group are starting to pick up just like it did back in March right before the Fed announcement happened on rate hikes. So how will the Fed respond because they are in a seemingly lose-lose situation, and what will happen with stocks because of that, because it's essentially runaway inflation at this point? So let's talk about exactly that. Let's discuss how the Fed will respond and how the market is going to handle this situation. And of course, I'll give you the exact strategies I'm using to handle it too. I just ask in exchange for you to gently tap that like button and consider subscribing too. It's super easy to do. So here are some of the biggest mistakes investors are making right now today. Number one, you are making investing decisions based on emotions. I mean, if you have that sinking feeling when you see red day after red day, that's exactly what I'm talking about. Number two, you still have not done a full due diligence on the stocks you own, which leads me to mistake number three. You are jumping from video to video on YouTube hoping someone will give you the right answer to should you buy or should you sell and at what price and all that good stuff. This is a recipe for destruction of your portfolio. But there is a solution to avoid that destruction, and it's for everyone. I mean, people with $1,000 accounts all the way up to seven-figure accounts, as proven by the over 1,000 members who are part of the Market Insiders private group, which is the ultimate wealth building community full of people like you, changing their financial futures, and the sale ends tomorrow to lock in your discounted price. We have over 100 different tutorials and lessons for you to take to avoid those mistakes, learn how to plan and do evaluation, and it's also where we have lessons on mastering your money, building up passive income, and retiring early and becoming financially independent, and we even have a real estate course in development now. And you are not only helping yourself and your family build a better future, but you are also helping others in need, as half of everything right off the top goes to charity. So don't make those mistakes. Make yourself a better investor today using the link in the pinned comment for all the details and to lock in your discount. All right, so I got to be honest here, looking at inflation, it is a runaway freight train at this point. We're sitting at 8.5%, the highest in 40 years, which of course is higher than last month where it was the highest in 40 years. And looking at specifics of why it's so high, you have energy and car prices and food and housing leading the way once again. It's just kind of like a reoccurring nightmare that just won't stop happening over and over and again. Every time you think you're past it, it pops right back up, and each time it's worse than the time before. And all those things being high up on the inflation list are not good, considering these are everyday staples that most people need to live a modern life. Now, yes, I get it. Core CPI came down, and that is kind of a little sliver of good news, but it's just that. It's just a little sliver of good news mixed in with what is a lot of ugly stuff. And keep in mind, energy prices really spiked after Russia invaded, and that situation still seems to be a long way off from being resolved. And honestly, it's kind of gotten ugly too as it kind of drags on. So there is probably no real short-term relief coming from all that. So we know the Fed has started raising rates, and that's going to continue to come to tame inflation. And given the accelerated pace of inflation, it would make sense to be aggressive with those rate hikes. And I think everyone could agree they should have started way earlier, but complaining about it now is not going to help us understand the current situation we're in. And now more importantly, if I could talk, that would probably be important too, but more importantly, how the market's going to react to all this.
But Luke, just sell and hold cash while everything crashes and burns. You're dumb to keep investing in this market because inflation and high interest rates always crash the market.
Well, I would say that is not true, and we have seen this before, and the opposite was actually true the last time we saw this. Holding cash during high inflation and increasing interest rates is the losing bet, and let me show you why. Let's say inflation goes to 12%, 15%, 20%, 25%, doesn't matter, whatever you think it wants to go to. Do you think the banks are going to give you 12%, 15%, 20% or more on your savings? The answer is no. We will be lucky to see 3%, and I mean maybe 4 or 5% on a 5-year CD or something like that. But the banks will use this to pad their margins that honestly have been compressed for the most part since the Great Recession. And if you think they care about grandma's little savings account not paying enough to live on, much less keeping up with inflation, you do not know how the banking world works in this country. So putting your money in cash or depending upon your bank to give you a decent return, despite interest rates being ridiculous high, is a losing bet. The interest rates they're going to be willing to give us are going to be so far behind inflation, it's going to be a joke, to be honest, and only an investment vehicle for those that just don't understand what is happening to their purchasing power. Those are going to be the only people that are going to invest in it. So if that isn't the right answer, what is the right answer? And what is going to happen with the stock market when we have super high inflation and the Fed is forced to continue to aggressively raise rates? The good news is we have been in this exact situation before. In 1980, we had inflation way worse than right now at almost 15%, and the Fed took the unprecedented stance of shooting interest rates way up to levels we have never seen before or since. And I know we have discussed this before on this channel, but I will give you this example once again to illustrate. Some of you may be old enough or remember hearing your parents talk about 12 to 15% mortgage rates being a good rate, which is just pure insanity to think about, but it actually happened. And the strategy employed by the Fed back then worked, and inflation kind of came back under control. Paul Volcker was the Fed chairman from the time he took office in late 1979 until 1981. He raised interest rates to a peak of just over 20% in 1981, and then kind of slowly pulled back until the US came out of the recession in 1983. And that's right, you heard me right, not 1%, not 2%, not 4%, and not even an unthinkable 10%. Now, I'm glad I only used 10% because I only got 10 fingers, but he raised them to 20% interest rates. So looking at today's market, just the threat of a half a point increase sends stocks plummeting. Imagine what the market will do if the current Fed starts to, get a little bit more aggressive with its rates. And I mean, not 20% aggressive, but just a little bit more aggressive. It's going to tank the market, right? I mean, even though cash loses money like we just showed, it's better than losing all your money in stocks, right? Well, I actually have good news for you. Despite what the media will tell you, despite what most YouTubers will tell you, despite what Kramer will tell you, the data shows the exact opposite is true, and let me show you exactly what happened when we had runaway inflation worse than it is right now, if you can imagine that, and the Fed was far more aggressive than we had ever seen before or since. So the stock market returns between 1979 and 1983, when inflation was last this high and completely out of control. Paul Volcker implemented his strategy of super aggressive rate hikes, and the S&P had the following returns. In 1979, it returned 12.3%. And then in 1980, it was a return of 25.7%. Then in 1981, it was finally down 9.73%, but then it was right back up to 14.7% the following year in 1982. And rounding out the period, it was up 17.2% in 1983. And as you can see here, the rest of the decade returned exceptionally well. So the last time we had real inflation like we have now, and the Fed raised rates aggressively to combat that inflation, the stock market returns were wildly positive 4 out of the 5 years, and the only people who lost money were those that didn't invest and just kind of held cash. Those that invested made a ton of money. So if you listen to the media narrative and the fear and the political BS and all the YouTube drama that's out there, you are going to miss a golden opportunity. But wait, let me give you more truths for those of you that want to try to give me the 25 reasons why this time it's different, even though that's been a losing strategy for over 40 years as well. The truth is, the only way to keep up with high inflation is to invest, and the best time to invest is during uncertain times like right now where everyone is just dumping stocks. All you need to remember is that this will pass. The doomsdayers are never fully right. And are you actually skilled enough to get out at the top, which honestly actually already happened back in November of last year, and then jump back in towards the bottom, or basically, time the market? I know I sure can't do that, and neither can the pros, but hey, maybe you can, but I don't think that's a very good strategy. So for me, in my opinion, for entertainment purposes only, we have seen this inflation show before, so I will not be speculating, but instead I will follow my plan and will continue to buy great stocks at these ridiculous prices. And I'm also going to ignore the noise because it's always wrong in the long run. And if you don't know how to get a price target or a plan or analyze a stock, and you want the step-by-step process to do that and much more, don't forget to lock in your discounted membership price using the link in the description or the pinned comment to join the group before that price goes up forever. And if you don't know what other stocks to consider buying, click this video right here for 9 stocks I've been buying like crazy, or click this video here for even more stocks I've been buying lately. So thanks for watching, and we'll see you in the next one.